You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family, if you're excited to hear about an individual who earned his financial freedom by the time he was 30, was a fantastic, high-performing individual in a Fortune 50 company for 10 years, and then came out and built a over 2,000 unit real estate portfolio that he owns 100%. He did not syndicate any of it. Just incredible human being. We're actually going to spend time talking about not how he made his money and built his portfolio, but about how he built his team and how he invests in his people. So without further ado, let's get right into the episode. Here is Logan Rankin. All right, Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton. We are powered by Quattro Capital here at Real Estate Runway, as you all know. And I'm joined today by a very special guest, Mr. Logan Rankin. Logan, welcome to the show. How you doing, sir?
Doing great. Thanks for having me on, Chad.
You know, I feel like I'm saying this repetitively on the front end, but all my episodes seem to have been a long time coming because how many times did I reschedule this before we finally got to sit down?
Yeah, a few different times.
Yeah, it was a few times. And it's just what, I mean, the podcast is my passion. I do this on the side, but, my primary role is running the acquisitions arm of Quattro Capital. So we have a lot going on as well. But Logan, I'd love to hear a little bit of background on kind of who you are and how you built to the level that you built. I know there's some businesses, along the way that you've kind of built on your own. Give us a little bit of background on who you are. And then I really want to dive into, the aspect of building quality teams. Because when you get to the level that you're playing at, when you get to the level that I'm playing at, you can't do it on your own anymore, folks. And it's not just about how much you buy. It's how do you keep what you buy? How do you run what you buy and make it sexy? So anyway, tell me about you, Logan.
Yeah, that sounds great. So for me, I got my start, took the traditional route, Chad. So I grew up in a blue class family, a great family, but just not very educated on financial literacy. So I did what, anybody does is they say, you should go to college. So I did that. And then you should get a job working for a corporation. So I did that. I actually worked for a Fortune 50 company for a decade. But I learned a lot there. I learned about how to, if you wanted to promote, you needed to build high performance teams. You needed to get great results. At one point, I was leading an enterprise-wide across the United States team and in charge of large P&L portfolios and really, really large teams at a young age, which helped me understand a lot about business, not just from a financial standpoint, but obviously from a people standpoint too. And then while I was doing that and getting promoted and growing at that company and working really hard, I just became fascinated with, I'm working 70, 80 hours a week. It's a retail job. So I'm working so hard for my money because that's what I was taught is you work hard for your money, but my money wasn't working hard for me. And I was never taught that. So I started reading books because it was like, I can't just keep throwing my money into a 401k that I have no clue where the money's going. I hear that it's like locked up until a certain age. So anybody that reads enough personal finance or wealth building books comes across real estate. I wish I would have came across it sooner. I pretty much tried everything else.
Don't we all, friend? Don't we all?
Yeah, I'm no Warren Buffett. I can't pick a stock. But yeah, I came across real estate and to speed up the journey, convinced my wife, we talked about it. Actually took a pretty big risk, put all of our money, except for $7. We had $7 left in our bank account to buy our first investment property, which is a single family house back in 2013. And underwrote it the same way the book said. So I still remember it. I still own that property. But anyway, it came within $100 of my underwriting, and that changed everything for me, Chad, because it wasn't about I think it was like $3,200 of net profit. It wasn't about the $3,200. It's about the fact that any other investment that I've ever owned, including my 401k, if someone said, how much are you going to have at the end of the year? I could never predict it. And the fact that I could come within $100 of the first time I acquired a property was incredible to me. So my wife and I kept putting all of our money over the next, 4 or 5 years into real estate. And it was a pattern. Like we would live off of literally 10 to 20% of our total income. And at this time, I'm making well into the 6 digits, and we would go broke because we put so much into real estate. And I kept doing that over and over and over again, to about 2018, 2019. And at that time, I had about 180 units. And I remember there was a Saturday where I assessed that it was taking me 10 hours to manage this portfolio. I did have a third-party management company doing it. I'm still working 70, 80 hours a week, flying, across the United States. And after tax, I was about making the same amount. So that was Saturday. Sunday, I talked to my wife about it. Monday, I put in my notice, and I was 30. So I officially hit financial freedom. Didn't even realize it right away. And I loved my job. Like it was a lot of responsibility and a lot of fun. It just, I wasn't making as much money in my job as when you considered the time as real estate. And I just wondered if I spent more than 10 hours a week on real estate, what I could do. First thing that I did is build a property management company, because a lot of what made me successful at my W-2 job was building teams, like people, systems or operations, and then understanding how to make P&Ls as efficient as possible or as effective as possible. And if you think about a property, right, at this point, I realize that every property just is a business. And if I apply, what I've learned in books and what I've learned in my job and spent more time on it, it starts with the property management company. So I started that property management company in 2019. And from there, that company today has grown in 3 years. I know this because we just celebrated our 3-year anniversary a week and a half ago, 1,888%. So it's been crazy. We went from starting it with 4 employees to 77 today. We have a construction part of the business, which we do all the 90% of CapEx and rehabs and stuff like that in-house. But more importantly, like my personal portfolio has grown from that 180 units to 2,550 units that my wife and I actually own 100%. So that's no partners, no syndications. We've been able to protect that equity and scale rather fast. And biggest reason for that is, building a company and people to really help reposition these properties and make them a lot more profitable from before. So that's kind of where I am now, and I have a few other smaller businesses as well, but it's kind of my journey to today.
Logan, I can't, I'm singing from the mountaintops right now. It's so funny how closely intertwined our stories are. I thought you were telling my story for a second, but this podcast is not about me. This is about you. And I think one of the biggest key takeaways that I had from that was, you didn't even realize you hit financial freedom. You look down one day, you're like, wait a minute. I'm making more money here because I'm spending 10 hours to make more money than I'm getting for 70 to 80 hours. And so you blew up a misconception of you have to work hard for every dollar you get. You got to work hard, but eventually the dollars start paying dividends upon themselves and the hour input comes way down. So just incredible. But here's where I want to spend the rest of the podcast, Logan, is, how do you build those teams? Because at the end of the day, we buy, it doesn't have to be real estate. We buy a thing, an asset. An asset is something that puts money in your pocket, not takes it away. And I would even expand that. If you go back and listen to the Rich Fetke episode, everyone, it's something that adds enjoyment or money to your life. So there are also liabilities that can take that away. But you buy these assets with the intent of making them better. And there's a lot of podcasts and a lot of materials out there talking about how you buy the asset. And that's great. We have to know how to buy the asset. You make your money when you buy, arguably, but then you have to make the thing sing. And I think you said just shy of 2,000 doors that you own, and we can actually talk indoors here because it's just you, Logan, that you and your wife that own these. You have to now make those assets sing and improve them and continue to grow your wealth. So let's kind of transition into that. And, what is if I'm a new guy who's just, look down and realize, wow, I need to start, building a team because I can't do this myself anymore. Where do you start? How do you do this, man?
Yeah. I think if I kind of was sharing this before the episode, I think from like 0 to 3, 0 to 5 million, a lot of it is just like educating yourself. You can do a lot of building your portfolio, and I'm talking gross, right? So like you can do a lot of like building your portfolio on your own with a team of employees that doesn't necessarily work for you yet, right? Having a good attorney, having a good person that helps you with acquisitions, having a good insurance broker, mortgage broker, etc. But at a certain point, to your question, if you really want to scale, like once you start getting 5+, 10+ million, scaling is about leadership. And I think like in real estate, there's a lot of people that just focus on getting the deal to scale, but they don't focus on like spending as much time finding that deal as finding the right person, and then taking time to really add value to that person. One thing that I've always learned and I try to do is in every relationship that I've ever been a part of, I want the other person to win a little bit more than me. So to answer your question is like when you start building a team, instead of thinking about what you want to get out of it, I would actually think about like what the other person's going to get out of it and make sure that they're truly winning, right? Winning as much, if not more than you. Because if everybody in your team feels that way, that reciprocation is going to be huge coming back. So to start building your team, you got to start thinking about what role that you need, where you're best. So I know, like, for example, where I'm best, but I also know the things that where I'm not good, like where my opportunities are. And I think this is what makes a good leader, right? If you read any good leadership books, they talk about strengths and opportunities. Well, being aware of those opportunities, I always laugh because like in school they focus on all your mistakes, right? Like get better at this, like you're not good at this. In business, you can kind of cheat. Like don't let those opportunities as a leader derail you, but definitely cheat by hiring somebody that's really good at those things to do them for you. So I think when I started building my business, the first person I actually hired was the person that was going to run my company, like the president of the property management business, and he has skills that I just don't have, and he's really good at things I don't want to do, and I'm just opposite. So that's a great position to start when you're building your teams. And as you start to build your teams, then you just want to start thinking about. I think this is where it gets tricky. I see a lot of people when they start building a small business, they start thinking about like who they know, or like they hire somebody, because this is really hard. As you start to scale, I just did a post on this the other day. The business needs something different from you. And as you start to scale, like in the beginning, you're wearing so many hats. So then you look at your team and like whatever this person's good with, you create a role for that person. But I will share a secret. Like that's one of the worst things you can do to scale a business and to lead a team. You want to think about like ultimately what is the role or the position that would be best for the business, and then hire somebody for that role or position. Because if that person would ever leave you, now you're trying to find an identical person with the same attributes and skills as that person you lost, not somebody that can fit the roles and responsibilities or the standard operating procedures that you built for it too. So I think that's something like in the middle of as you're growing. And then when you start getting larger as a business, you want to focus a lot more on ensuring that your team is highly engaged. Like a fact, 74% of people that work at companies are not engaged. Can you imagine like if every 3 for every 4 people on your team aren't engaged in their work? So that brings you to the question like, well, how do you engage them? It's taking the time to really slow down and ensure is there clear expectations in their job? Like, do they understand the clear expectations of the roles? B, are they trained to be able to deliver on those expectations? Like, did you or the leader that's leading them, did you train them so they can do it? And then the lastly, is the leader on a routine basis like motivating and engaging them in a way that they would like? That could be compensation. It could be more responsibility. It could be a feeling of being important. But like at our company, we manage now 2,800 units. 2,550 are mine, but the other 250 are my employees. So a great way to motivate our employees is we will only manage my employees. We don't third party manage anybody else. But just to share you as an example, that's a huge motivator because we are now going to manage their properties at the same cost basis as my 2,500. So think about the economy of scale that they get on something as simple as like trash pickup, because the negotiated prices are like so low. The management fees are so low. The costs are so low. And those 250 units I just mentioned, every single employee that has joined my team didn't have real estate before they started. So now they get somebody that knows how to do it, that's educating them so they can build their own wealth as they work in the management company. How does that? So they're winning, they're motivated. So how am I winning? Can you imagine if employees, because don't you always hear this, like, think like an owner in your job? Like, make sure you think like an owner. If you're not an owner, like in real estate, it's really hard to think like an owner. So if they have their own properties and they're building their own wealth, can you imagine how much smarter they're going to be about thinking like an owner because they're an actual owner? So that comes around and benefits me too. So I gave you a lot of different examples there, Chad. I could talk about this forever, and I could expand about any one of them. But I think in general, what I would like to say to the audience: don't really think about the amount of time per week that you are assessing your own leadership skills and your time building your team versus just finding the deal and closing the deal. Because if you really want to scale, if you want to build a big portfolio, you're going to have to get really good with learning how to lead a team.
There are just, do you have a microphone right there with you? Like, if you could just pick it up and drop it on the table for me, like, that'd be fantastic. There's so many mic drop moments in everything that you just said right there. And I think the takeaway, well, first of all, we all suffer from the one scarcity that we cannot ever get abundance of, and that is time, right? Everyone, Richard Branson, Logan Rankin, Chad Sutton, everyone has the same 168 hours in the week, and you get to choose how you spend them. You mentioned, in the beginning when you had the realization that, wow, my money is like, I'm working for my money, but my money's not working for me. I think about time in the same way, right? You can either spend all of your 168 hours or you can invest some of your 168 hours. And when you invest that into others, you multiply and you get more hours, right? And oh my gosh, like, I'd love to go a little deeper into what you talked about with the employee engagement there, because I'm going back to my corporate days. I was with a Fortune 50 company as well for about 10 years. So again, it's funny how similar our stories are. And that was kind of one of the buzzwords one year is run it like you own it. Run it like you own it. I don't know how to own a Fortune 50 company. I have no idea what that looks like, but you actually created a way for and to actually add value to your people and turn them into assets in a way that, we got to expand that a little bit. So how does that work? How did you get people excited to, like, you offer them, say, hey, I'll manage at the same rate, but do you help them learn how to buy a property? Like, are they like, how does that work? Because they have to go from a bunch of steps to figure out how to take advantage of what you offer them,
Yeah. So one of my businesses is a real estate and leadership, like personal finance, like coaching business, where I try to help out as many people as I can, give out free content and stuff like that. So all my employees get free personal finance coaching from me. They get free real estate coaching as well. In fact, this next week we have a real estate workshop class, like a half a day, where anybody can go to it as long as they read 3 books, because I'm a big believer on not giving handouts, and you gotta put in the work to be able to do it too. You read those 3 books, you get access to this real estate course, and then we basically go through how to find deals, how to underwrite deals. When they find a deal, we'll make them underwrite it first, but then so they don't screw up, I'll underwrite it, or the president of my company will underwrite it with them. We help them with negotiating even. We help them with creative financing if that's needed. And then obviously we help them substantially with how to manage it. Right now we charge all properties 5%. And there's no other fees. Like, there's no other, like, 10% on vendors or this. And I said, we also rehab the properties. So, like, right now in this industry, it's not just about having great management, because I'm a firm believer that 99% of management companies suck. And they're not held to the standards that they should be.
Brother. Amen. Ask me how I know.
Yeah. So they get an amazing property management company, but they also get it at a rate, like, we don't third party manage, because we would have to charge 20%, and I still feel like the other person's getting the benefit of the deal. If you just look at the pure profit and the change in NOI that we take properties by. So they get all that. But then it's like the repositioning. So, like, we have significant discount on materials, And then our speed of which we can rehab properties is really, really good too. For example, we can rehab heavy rehab, which is $10,000 to $20,000 in 72 hours. That's our typical expectation. So we'll get that done in 72 hours. Tear out, rehab, have it done, get it ready to rent out. So you get all those benefits as an employee if you work at the company. And then there's more too. Like I've never taken a dollar from this company, and I've never paid myself a dollar. So all profit within this company actually gets redistributed to all the employees at the end of the year, or into CapEx that the company needs, like trucks and health insurance. And even better, the P&L is fully transparent. So anybody from a painter to a rehab specialist to a leasing specialist to an actual director in the company can literally look at where every dollar is going in the company too, like full transparency. So you actually that if you're saving the company and driving profit for the company, and where the money's going, like think about that from an engagement standpoint, right? That's going back to you, not the quote unquote owner. This year alone, Chad, we're going to spend $100,000 in training and development alone. We're literally we're paying for to build an academy within our company, so that if you are, let's say, a service tech, and your job is to, when a resident, we don't call them tenants, when a resident puts in a maintenance request to get their garbage disposal fixed at their community, we don't call them apartments, we call them communities, and we that service tech, right, is in most companies is paid a certain wage. And then if they do a really good job at the end of the year, they're given a raise. We want to engage them more on just like from a performance standpoint, certainly from a performance standpoint, but what else could you do that would mutually benefit the company and this person? Well, let's just say this person is not very versed in plumbing. Well, what happens if we said, because you're doing an incredible job, you're eligible to be training on plumbing? And here are 5 different things that you currently can't do. You will train with our in-house licensed plumber. For example, number 1 is how to put in a water heater. So we train them how to do in a water heater. Then we teach them how to do this and that. And anyway, they go through, now they can do all 5 things as a non-licensed plumber, but fairly easy things. They're signed off by a licensed plumber so that they're competent in being able to do it. And once they're competent being able to do that, they can obviously be able to save us a lot of money doing it, obviously, because we wouldn't have to hire that out, but also they deserve a raise. So now, boom, so instead of like just being like, hey, I'm just going to get like a raise every single year, we can give you like multiple raises based on your skill level. And we can do that for like all areas of our business. So like that's exciting, because I think everybody, like from an engagement standpoint, if you understand expectations, and they're high, like, let me talk about, I don't want to divert, but like we're in one of my biggest goals, Chad, is to disrupt property management across the United States one day. So we're working on 17 different operating procedures that I think nobody else is doing, or at least to our skill level. In Wisconsin, because I'm from Wisconsin, last year, the average service request was done in about 49 days. So tenant puts in a request to fix the garbage disposal.
Whoa, blow that tape back. 49 days? What?
Yeah, that's like average in the United States. I think they blame it on a lot. This is all service requests, because obviously if you're waiting on a fridge, because it's on back order, so maybe that's backed up. So it's a combination of all of them. So maybe that's
sure.
Maybe it's not as bad as that, like overall, for things like fixing a garbage disposal. But it's certainly not good. Our expectation is when somebody puts in that service request that we communicate to them within 24 hours and it's fixed within 48. Right now, we're doing it about 90 to 95% of the time. So if we're fixing things within 48 hours, right, or communicating within 24, and we do that at a high quality and at a good, friendly service, like we got that speed, and we can track that, and we can see who's the best service tech, like running the best territory. Again, and then we can see like, well, can this service tech take on more units? If they take on more units, how can we pay them more? So it's like all these different kind of ways to engage your team. I know that was quite a few, but the point of all this is like, none of that's like super complicated. It just takes time to think about like, okay, what is the system? Like, what is the standard operating procedure? Like, let's get that down. what is best for your business. Let's put a person to be able to run that system, but let's think of all the ways to make that person win if he was like motivated. Like think about it. Like even if you're that person's boss, if you knew you could get paid more for achieving X amount of speed, X amount of quality, X amount of service, and on top of that, if you just like learned more skills, because there's not a lot of people that right are going to be like, hey, can you like teach me how to put in a water heater, because I'd love to put in a freaking water heater. Like no. So but what happens if they would get a pay raise because they knew how to put in the water heater, or you train them on electrical? And I think that's my point to your question is like, how do you think about how to properly reward somebody so that they would be asking for these things, the things that you would want them to do anyway?
Wow. I'm just like, I'm in awe of this episode right now, because quite literally you're talking about providing value to people so that they will in turn provide value to the business. And, one of the problems we have with the employment society is to your point, there's a standard expectation of, I make this much money and I do this much to get it. And maybe I'll do a little bit less and just get by. And maybe I'll get a measly pay raise every year. And what you're doing is just figuring out, what behaviors do I want, and then reverse engineering how to incentivize it. And I think the brilliant thing that you've done here in your business construct, which I'm actually like taking feverish notes on over here, is you figured out how to make people engaged and invested in the growth of the company without actually having an equity share in the company themselves. Because it's almost like their own personal growth and development, and in some cases even obviously their compensation, but in some cases even their investment strategy is now tied to the company. So
Yeah,
that's
like the guy that runs my company, he started the company. He didn't have any properties.
yeah,
Um, he now has over 100, and he makes more money from the cash flow on his own properties that he owns 100% for the majority of them,
yeah.
and than he does with what I'm paying him. Like think
Wow,
about that for a second.
wow.
Like we're the Fortune 50 company, right, Chad? I'm sure yours would give you like stock options that vest maybe.
Once you got to a certain level, you could get stock options. Yeah.
Right.
Yeah.
And like they certainly, or they offer you a 401k match that basically locks you to access that into your 59 and a half. Basically, yeah, to your point, your words, I just reverse engineered this. Like if I was working at my company, like how would I have full control? Like honestly, one of my biggest goals is, how do I retire as many people in my company early as possible? How many multimillionaires can I make in property management? Think about that for a second. Like, so like that should be the goal, because obviously if they're achieving success, then I'm achieving success. And I think there's a lot to be able to go around. And I think in probably the Fortune 50 company you work with and I work with, I don't think they're always, centered around necessarily that. I think they're more around like, how do I lock these people in for as long as possible, or dangle a carrot as long as possible?
Pretty much. And with that, we actually are going to drop the mic. Logan, this has been an incredible episode, but if you don't mind, we got to take this over to a couple of questions we ask everyone on the show. And I may have to have you back, man, as I feel like there's a lot more to this conversation than we can do in a 25-minute episode. You ready?
Sounds good.
All right. All right, folks, edit that little pause out. All right, man. So time for a couple of questions we ask everyone on the show. First one, Logan, what is your superpower? I think we just heard a lot of it, but what is your superpower in the business world?
Yeah, one of the things that we do in my company is called a predictive index. So it basically gives you, like, you answer some questions and it tells you your behavioral style, your leadership style, like the things that you're naturally good at. So I'm a strategist. So what that means is I'm able to, quicker than most people, assess people and assess processes or financials, and just see through the gaps and how to make them better. Roadblocks I usually see right through and don't get stuck as much. And I think what makes that particularly in my superpowers, it's not just with like, you know, I don't think in terms of just systems, because I think like I've come across a lot of people that are really good with like operations and systems, but they're really bad with people. So you can only do that. But a strategist understands that both, right? And obviously, in my opinion, the better you can be with people. And then if you can understand those systems, like, you can connect both. So I think that has been my superpower, and it's really helped me in business in general.
That is the power of influence, my friend. Very well said. All right, let's go the other direction. So tell me about your biggest failure to date, or life or business, and what did you learn from it?
Yeah. Oh, I got a lot of those. I would say it probably goes hand in hand with my superpower, is because usually I can see all these opportunities that most people see roadblocks in. I just want to attack so much. So usually, like, jumping into so many things with speed, and not realizing like how much time that's going to bog me down to be able to build the systems or the people behind it, is usually where I get myself in trouble. But I think people like actual examples here. And I have a lot, and I'm just as comfortable talking about mistakes. But I would say one of the biggest ones I can remember would be when I first retired from my W-2 job. I get rid of 70 to 80 hours and 19 weekends. And I don't think we talked about this, but I now have a 5 or 7 year old. That time they're like, 1 and 4. And I knew I did that to spend more time with my family too. But I also am like, oh my God, I have all this time. So like the first thing I did is I did start the property management company. But what I didn't say is I also started a roofing company, a construction company, and a few other companies like within the first 6 months of getting rid of my W-2 job. So I effectively got rid of working 70 to 80 hours and then worked 70 to 80 hours trying to build all these businesses. And it was, I mean, when I looked at what I was making in those actual businesses, it wasn't a lot of money. I had the thought of going full vertical integration. I own a lot of real estate. So I should have a roofing company because I'd save myself on roofing. When in actuality, it would be a lot easier just to have a lot of roofs, negotiate a great price, and let the people that are really good at roofs put on the roof, right? So that would be one of my biggest mistakes, because like I think I made a mistake with my family, by them getting really excited to have more time with me and me filling that with other random businesses. I think I made a mistake to all the businesses I started because I didn't have enough time to properly give them the strategy that they need and the time that they needed from me. And that was an awesome learning lesson for me, because even some of those businesses I had partnerships with, and obviously with knowing my story now, I've worked really, really hard to focus in on one core business, which has been my property management business, and utilize my ability to acquire more properties, which is my holdings business, to use those as a 1-2 punch. And I think that like has centered me. And every time I want to start, I see like a business opportunity, I just ask myself, how much time is that going to take to achieve that opportunity? And will I be able to achieve it to like the level that I want to, Chad? And most likely it's like, well, that would take 4 years. Do I want to spend 4 years, doing doing that? And usually the answer is no, because I retired early to have more flexibility with my family and to design my life the way that I want to. And ultimately, if I focus really hard on my 1-2 punch, I think I can make that very, very much more successful than like 5 average businesses.
Yeah, and you said a lot there. So is the key of that lesson, was it trying to scale too, or trying to vertically integrate too quickly, rather than focusing on the core business, which is the real estate holdings, or what would you have done differently there? Because I mean, clearly you have
Yeah.
these businesses now. So was it too early, or what is the learning there?
Yeah, so my two main businesses right now are just the property management business, and it does do a lot of construction, and my holdings business. But like all these other ancillary ones, like a separate construction
Hmm.
business, a separate roofing business, I don't have any of that, right? We don't do our own roofs. We don't do a lot of that other stuff. Those aren't like employee driven. So I think the
Understood.
less,
Yeah.
yeah. So the lesson is like, focus in on your core business and what you really want to be good at, even in the property management business. Like, for example, there's parts of the property management business that don't make a big difference, and like, should you manage them? Like, should you like have somebody do all of your laundry for you because they're really good at laundry, and you just hold them accountable for doing laundry, right? That can be a property management thing, or that can be a separate laundry company that does it. So I think like really focused on like what is our core business and how do we be really good at it. Even the way we design the property management company, like we don't have property managers on most of our properties because I think property managers focus on 15 different things and they do them all average. So for us, like this is a whole different episode. We don't have one property manager. Most of our employees only do 2 or 3 things, but they do them for a lot of units and they do them really well. And it's the same with like my concept. I want to, when I look at my week, which I do on every Sunday, I look at like, where do I want to spend my time? And, you know, what is going to be my ROI on that time? And usually it's like my 1-2 punch, the property management and the holdings business. The other ancillary businesses I have, they have to really excite me from like a passion project standpoint. Like I really like that.
Yeah.
So like I have a hard money fund, but
yeah, I love it, man. All right, so moving on to the next question. You have a work of art that we need to share with the audience here, a book that you've written. Tell us about that book and tell us where we can find it.
Yeah, thanks for that plug. It's Find Your Financial Freedom. It's on Amazon.com, on pretty much any book site. And I'm really excited about it. It's an Amazon bestseller right now, so I think you should check it out. And I think it's for a lot of different investors, but certainly anybody that wants to achieve financial freedom, even if you're not in real estate. It has 3 parts I just want to mention quick, Chad. It has like a mindset part to help wrap your head around the shift in financial literacy. So I like compare this to a similar like Robert Kiyosaki book. Is like, how do you like understand the mindset shift that you have to have for financial freedom? But I think we're like, you know, Rich Dad, Poor Dad falls short is there's not a lot of actionables in that book. So like I do 3 steps for my building my net worth every single month for over a decade. And I like line out all 3 steps in 3 chapters that I think everybody, no matter where you are or how you've scaled, if you kind of copy that would help you tremendously. And then it ends with a bonus chapter on real estate and a bonus chapter on how to teach this to your kids. So it's one thing if you're learning, but as you're learning, the best thing that you can do, it actually reinforces your own ability to learn, is how do you teach that to your kids? And I think it's called the legacy chapter, but I think there's some awesome lessons in there that people have liked too.
Wow. Incredible, folks. And scroll down in whatever modality you are listening to this podcast, and that link is going to be in the show notes for you. Click it, check it out. I think that you are going to really enjoy that book. And last question, last one. One of our 4 pillars here at Quattro Capital is philanthropy. And, you know, I'm a big believer that, you know, to receive in life, you need to give and give back into the world. So a lot of times we will invite our guests to mention the philanthropy of their choice or what they're working on. A lot of times people who are listening to the show will go and give on your behalf. So, you know, what is your kind of philanthropic interest and, you know, what are you working on?
Yeah, anything related to health and financial literacy, especially with kids. My wife and I actually just opened up a foundation this year that's predicated on both of those things. So it's the Rankin Family Foundation, and we really focus in on housing, health, and financial literacy. And that's curriculum, that's education, that's the book, where all the profits that we reinvest into this nonprofit. So that's kind of where our passions lie. And I think there is a significant gap in housing and in health education and financial literacy. So those are kind of like my passion and what we're doing about it right now.
Thank you for that. And Logan, this has been an incredible episode. If our listeners wanted to reach out to you, connect with you about your mentorship group or anything of that sort, how might they do that?
Yeah, so you can just check me out on social media, Logan J. Rankin, on both Facebook and Instagram or LinkedIn. And I try to put out as much free information as I can. I am usually speaking at different events, and I usually put out 1 workshop a year. So just watch my social media for those details.
Fantastic. Well, Logan, thank you so much for coming on the show. Everyone, this has been another episode of the Real Estate Runway podcast. Until next time, over and out.
Thanks, Chad.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway podcast.